In this video, we're going to be doing further examples of marking up your zones based on 4-hour structure. So again, in this program, I only focus on higher time frame structure, higher time frame being 4-hour and 8-hour and daily, but then everything is based on the 4-hour. So you might have a daily level, you will then mark it on the daily and then drop down to the 4-hour and then adjust to the 4-hour. So pretty much everything can be done the 4-hour. Again, there are lower time frame zones such as 1 hour, 15-minute, 30-minute zones. That's fine. I don't trade like that. I like trading higher time frame structure. It has a higher probability, and you tend to get the larger time frame moves as well. So that way it removes all the noise, I guess you could say. So right now we're going to practice marking up some zones, and we're just going to watch how price moves from level to level on the pair CAD JPY for the month of January to March. So it'll be 2 months worth of price action. So after this video is done, go back, find this pair, mark up the same. Again, you want to make sure you're always using the FXCM charts. So go up after you watch this video 2 or 3 times, go back, mark up the month of January to March, and you'll copy and go back and mark up the zones yourself. That way you can practice and follow along with the video. So on the daily time frame, you can see we're pretty much bullish, right? So the reason we can tell that is we're really just moving higher. We're not really moving down. We're not moving sideways, kind of sideways. We are making higher highs and higher lows. For example, higher high, higher low, higher high, higher low, higher high, higher low. So we kind of expect a higher high, okay? So we are overall bullish. So now let's go down to the 4-hour and let's look at our 4-hour zones. So right now we have structure where? So we have structure here. So let's go to the line chart first. So we have key structure. Again, when we focus on your main reversal points within the market, okay? So again, we have structure here and we have our key reversal point here. And you could say this is also a significant reversal point here. So that's all we need. Everything else is kind of irrelevant, okay? I mean, you could argue that we also have this level here. So remember, when you have 2 levels, you could put, you want to take the lowest of the 2. But really, everything we have is pretty much here, okay? So what we want to do now is we want to mark up our zones. So let's go ahead, and this one's kind of far away. So, I mean, this one, for this example, is 50 pips away. So yeah, we'll go ahead and mark that one up actually. So what you want to do is go from the body closures, and you want to drag this across. I'm just going to drag this all the way across. We may need it, we may not. And you want to take the average of the wicks, okay? So let's say, for example, down here. And you want to round price. So remember, 4-hour example, I should say. You want to make sure we're always focusing on quarter prices, 200, 500, 800, and 1,000. So an example of 1,000 price would be, in this pair would be 82. That would be 1,000 price. A 200 price would be 82.200. A 500 price would be 82.500, and the 800 price would be 82.800. And then the next 1,000 price would be 83, and then 83.2, etc., etc. So whenever price isn't near these numbers, what numbers do we use? We use 25, 50, 75, 100, 125, 150, etc. Okay, so you always need to make sure you're rounding off both sides of your structure here. So 80, 225, see how it's not cutting through the body, and then the bottom of this is what? 80, 150, okay? So then the same thing here, we have like this sort of double bottom forming. Extend this out. So 550, whoops, 550, see how it's not cutting through the body, and then 500. Again, see how it's respecting that quarter price. So this candle right here is a gap. So in this case, you would let it cut through the body. And then from here, we have from the body closure to the average of the wicks. So again, what would it be? 125 to what? 175. Now, because the 200 is right above it, we would see how that looks. If it's a little too big, we wouldn't use it. But I actually quite like that. It's not too far away. Again, sometimes price would just push up into that level, okay? So if obviously if the 200 was like up here, that's too far away. But in this case, it's actually not that far, all right? And then our next one is up here. So again, from the body closures to the average of the wicks. So in this case, we're just gonna do all the way up, okay? We may not even need to use that. Yeah, I kind of like that. Okay, cool. So 925 and 100. Perfect. All right, so what we're going to do is we're just going to play price, and we're just going to see how price moves from level to level. Okay, we're not going to be taking any entries, that will come later. We're just going to get a basic understanding of how price moves from level to level. So let's hit play price. price is moving down, tap structure, pushed up. It's either going to break and respect. So then it broke through, tested, and now it's pushing up higher. So you could take in a buy there and a buy here. Coming up, respected, so you could take in a sell there. Came down, just missed our zone. What is price doing? Coming to test again. So if it respects here, as in it closes within or below, we can take a sell, which we would have taken a sell there based on the lower time frames. Coming down, if it respects here, you could take a buy, which it did. So you could really just be trading this little range that we're in. So now if price respects here, what do? We would look for a sell. So price is respecting, and now where is it going to go? It's going to go down to our next major level. If it doesn't go here, it's going to come back up here. In this case, it came back down, respected. So really, this is sell, buy, sell, buy, sell, buy. Now at some point, one of these levels is going to break. It has to, okay? Price faked out, closed back above, tested, now pushing higher. Tested, a little bit of an M pattern there. Coming up to test again. And now we are breaking higher. Broke above, tested. So now we're moving higher. So what is happening now? Prices come back down to retest structure, pin bar, bullish 4-hour pin bar. And now we're moving higher as well. So let me just pause real quick. So just to do a recap, price broke above, 4-hour close above, test, pushed above, respected, pushed back down. We just missed our zone. Sometimes price will come very, very close. It's not, again, it's not an exact science, but majority of the time, as this is a really, really good example, price will push right into the zone, close just in your level. See how this closed to the pip? There's a reason it did that, okay? Closed within and then fell. And where did it tap? Right into structure. Tap, broke below, faked out below. So this right here is a fake out because it closed below, enticing sellers, and then immediately reverses up, breaks back above, test structure, and then moves higher. So a buy could have been taken here, and now we're broken higher. So then we broke out, broke above, test, pushed above, respected, 82. Well, let's mark off what price this was. 82,700. Came back below, gave a clear break and retest scenario. So as you'll see in the break and retest section, this would be considered a minor break. This would be a minor retest. This would be considered a major retest, and is now pushing up higher. Okay, so what is price going to do next? Price is either going to come back and test this level down here, or it's going to move higher. So let's have a look. Boom, price has now moved higher. So let's keep playing price. So we respected price at what number? 83,800, just shy of it. Okay, so you can see that price kind of made a new zone here. A36, whoops, 625, and A3750. Let's see what A38 looks like. Perfect. So price is respecting here. So we're either going to break above this, or we're going to respect it and go lower. Price is pushing up, break above, fake out, come back below, break above, test. So what needs to happen? Price needs to come back down and retest this level. Okay, so see how price just had this impulsive move here? What is it respecting? 85. What is 85? It's that 1,000 level that I was talking about. So 82, 83, 84, 85. This is how accurate price is. So even when price is moving up higher and you have buys in from here, you can kind of anticipate where it's going to reject from just by marking off these price points within the market. So again, if I put this at 84, what was it? 84,975. Yep, and 85. Look how accurate that would have been. Boom. So you could have got a sell from there, and what price have to do now? We know price is going to come back down. Why? Because it needs to do impulse correction. It needs to come back down and make a new higher low in order to move higher. So if we respect this level, what is price going to do? Price is most likely going to move higher. So let's just keep playing. Price is pushing up, testing that structure again, and we're off. Break, retest. Even on this, break, retest, and now what's going to happen? It needs to push up higher, and at some point it's going to have to correct to come back lower. And what did we just hit? 86,400, and retested 85,800. And we're off. So notice how this is 2.5 months of price action, and we only had 1, 2, 3, 4, really 5 zones. And these zones we marked off from using December price action, and we never really had to adjust them because price was respecting them. And all price is doing is moving from one zone to the next, one zone to the next. 4-hour closes within or above or below, and then you can get your direction just by using that, which you'll learn in the next sections using the 4-hour confirmation rule. All right, I hope this helps, guys. Go back after watching this a few times, mark up the same time frame here between January and the end of February for 2021 on the pair CAD JPY. Focus on your quarter prices, use the line chart as I did, and practice watching how price moves from level to level. And even if you want, practice taking trades once you've watched the later videos and you understand how to take trades using the patterns and price action exhaustion. But also go back through this as well and look at the candles, because as I've covered in the Japanese candlesticks video, I've shown you which candles you need to look for. So here, right here, a 4-hour bullish engulfing pin bar, 4-hour pin bar. What is this? This right here is a bearish engulfing 4-hour pin bar, pin bar, pin bar, spinning top right here, really pin bar, bullish engulfing, bearish engulfing, bullish engulfing. These are candles you need to just be able to see and just know what they mean and what they do. Okay, so go back and just highlight these candles. For example, what I would suggest you do is take your little tool like this, and you could say, for example, all right, 4-hour bullish engulfing, and then go back to other ones and say, okay, we have a 4-hour pin bar. Remember, the color itself doesn't matter, as I've explained. It's really what price is doing, what price is telling you. A 4-hour pin bar and a 4-hour bullish engulfing are great bullish reversal signs. Just like a 4-hour shooting star, which would be this one, is a great 4-hour, in this case it's a 4-hour, great bearish reversal signs. This would be a 4-hour shooting star. It's also a very bearish candle, but is a 4-hour shooting star. Why? Because that really long wick to the upside. Okay. If you guys have any questions, please let me know.